Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian equities retreat, hitting fresh all-time highs in intraday trade. The Nifty fails to touch the psychologically crucial mark of 25,000 by just a whisker. The benchmark indices end with modest gains, but the mid-cap index ends over 1% higher. All eyes on the US Federal Reserve's two-day meeting that begins tomorrow. The Birla-Adani turf war in the cement sector heats up. Ultratech snaps up an additional 32% stake in India Cements from the company's promoters and related entities, now holds 55% stake in the company. The move triggers an open offer at 390 rupees per share.
For us, this is now a period where we're going to be investing significantly across our businesses in terms of research, in terms of capacities, in terms of growth.
Sanjiv Goenka lays out an aggressive growth plan for the RP Sanjiv Goenka Group. Plans to spend 50,000 crore rupees in capex over the next 3 years. Eyes a market cap of 2 lakh crore rupees in 30 months as acquisitions will drive the expansion of the chemicals business. Adds the group is also looking at pouring into modular nuclear reactors. That's a CNBC-TV18 exclusive. The digital economy could account for 20% of India's GDP by 2026, as RBI's report on currency and finance for FY24 says India is leading the global digital revolution thanks to its digital public infrastructure. Governor Das flags cybersecurity and data privacy as key risks.
There is a point in the near future, I guess, where people can extrapolate themselves on when it gets to a break-even point.
Ola Electric prices its IPO at between 72 and 76 rupees a share, looks to raise 5,500 crore rupees through a fresh issue of share. Promoter Bhavish Agarwal says he has cut back on the stake he's selling as he expects the value of his holding to rise going forward. Hopes Ola Electric will turn profitable in the near future. Another setback for Delhi Chief Minister Arvind Kejriwal. The CBI files a charge sheet before the Rose Avenue Court against him and others accused of corruption in the now scrapped Delhi excise policy. Tensions escalate between Israel and Lebanon as the IDF launches missiles at Hezbollah targets inside Lebanon. Israel says its attack is a retaliation to a Hezbollah rocket hitting a football pitch in Israel, killing 12, including children. Iran warns Israel against action within its borders. Turkey warns it might enter Israel to help Palestinians there. Well, starting with the markets, they did get off to a strong start, but then retreated after hitting all-time highs in intraday trade. So you saw the galloping start, which took the Nifty just within striking distance of that psychologically crucial mark of 25,000. However, it failed to touch that number by the merest of whiskers, hitting 24,999.8 and finally closing the day flat. That's the story as far as the Nifty is concerned. The Nifty mid-cap index 594 points higher, 1% higher. The sensex also closing flat, 23 points higher. The small cap index up by about 1%. So history almost made there as far as the Nifty was concerned. All eyes now on the US Federal Reserve's two-day meeting, which begins tomorrow. Prashant is standing by now to break down the market action. Almost 25,000 on the Nifty. Prashant, missing it for just a bit. I guess we'll have to wait for tomorrow.
25,000 for all practical purposes, but you can't put it down because we didn't hit 25,000 within decimal points of that number. But that's the kind of market we had. The Nifty flattened out. The Nifty Bank, which has been weaker. I mean, by the way, the Bank Nifty was one of the few indices which ended lower. Most of the indices the prior week, which had ended lower, and ended up last one, but not the Bank Nifty. So there has been a bit of a weakness as opposed to what the Nifty has been seeing for some time now. Bank Nifty also flattened out. Mid caps and small caps, much better performance, and those indices ending between 0.75% to 1% in the green. I'll start with stocks on the large cap front. BPCL, Divi's, L&T were some of the top Nifty gainers. You had Bajaj Finserv, Ultratech and Mahindra, which also stood out. On the downside, there was Titan, Bharti and Kotak Mahindra Bank, which lost a little bit. Broader market breadth was positive, comfortably in the green. So I'll start with what was up. RVNL, IRFC, RITES, some of these railway names doing very well. Financials had a big day. Bandhan Bank, stocks just, 20-25% off the COVID lows. So that's the extent of the underperformance here. So valuations have been cheap. and numbers surprised. Stock saw a big move. PNB, solid numbers. It sparked a bit of a rally in other PSU names as well, PSU banks as well. The PSU bank index ending about 2% higher. You had City Union Bank, Karnataka Bank, other sort of banking names which were up. Now, you had Mazgaon Dock, KNR Construction. Voltamp was a big move, a 15% pop on Voltamp. There was NBCC, Keynes, some of these names which did well. EID, Parry and CAMS were some of the others which stood out. Rupa, Liberty Shoes, these wealth management companies. Novama reported a solid set. So Novama was higher. There was 361, which was also up and about. On the pullback side, in terms of what saw profit booking, New India Assurance, Friday was a big day for some of these insurers, especially the PSU ones. Equitas Bank, Spandana Spurti, CSB Bank were some of the other pullbacks. Wandala, ISMT, Aarti Drugs were a few others which ended down in the red. A quieter kind of a day after what has essentially been an up and up kind of a market for many weeks in a row. You look at July or you look at 2024 to date, India ranks right on top in terms of returns vis-a-vis global markets.
All right, Prashant, many thanks for joining us. Now, after seeing a sharp decline on budget day, gold prices trading at a premium of 3,000 rupees per 10 grams. This is the highest premium that consumers will pay in a decade. The premium is the extra cost above the international gold price that buyers in India have to pay. The government's recent decision to cut the import duties initially lowered gold prices to their lowest level in nearly 4 months, but this move ignited a surge in demand, pushing prices back up. So, that's where gold is currently trading. Now, CNBC-TV18's news break has been confirmed. Ultratech Cements has picked up an additional 32.72% stake in India Cements for close to 4,000 crore rupees, taking its total shareholding in the company to 55%. While Ultratech ended 2% higher, India Cements ended marginally in the red. Nisha is standing by now with the details. Nisha, so this is really the culmination of a transaction that began about a month ago. Take us through the final details.
That's right. It's a big deal in the cement sector, and the consolidation spree really continues with very aggressive players there, deep-pocketed conglomerates like Birla Group as well as Adani Group. And this time, Ultratech has clinched the deal for India Cements, which, remember, has been up for acquisition for a long time because of the succession gap in the company. Now, after buying Radhakrishna Damani's stake in India Cements, the writing was on the wall that Ultratech has put a foot in the door for buying out India Cements, and now it has announced 32.72% stake buy of promoters as well as associates for about 3,900 odd crore rupees. So both put together, the financial investor as well as the promoter and associate stake, Ultratech gains about 55.5% stake in India Cements at a cost of roughly around 5,800 crore rupees. We'll have to launch an open offer at 390 rupees per share, and the success of the open offer will define the actual final cost of this acquisition. Nonetheless, it's an important acquisition to make South India the playing field for Ultratech, and Kumar Mangalam Birla did state that they will be more effective in the southern market with this acquisition and will also accelerate their target of 200 MTPA plus kind of expansion and capacity in the cement sector. Now, looking at Ultratech's growth, both organic and inorganic, has been quite aggressive in the last few years. At the moment, at 154 million ton, 200 million ton target by FY27. And if Kesoram and India Cements will add 25 million tons by the end of this financial year, their inorganic contribution could for the first time be higher than the organic contribution in the face of the competition that it's seeing in the sector. But with CCI constraints being lesser for them as a player in South India is likely to be a playground for Ultratech for future consolidation and more fight for the cement assets there.
All right, Nisha, and staying with that story, India Cements Vice Chairman and Managing Director N. Srinivasan has assured employees that there is no need for people to feel threatened or insecure about their future, despite a change in ownership. Jude is standing by now with the details. Jude, it really is an end of an era there as far as N. Srinivasan is concerned, but take us through what he has told employees.
Well, it was an emotionally charged morning, as one employee put it, even as N. Srinivasan addressed 300 of them over a video call, many of these employees being plant heads, unit heads, department heads, as he bade farewell, even as he said he was all set to leave India Cements for good. But more significantly, that video call also had N. Srinivasan reassuring employees, saying that they were in good hands under Ultratech Cement, and he had in fact also been personally assured by the chairman of the Aditya Birla Group that policy continuity at India Cements would in fact continue to be maintained. And Srinivasan also reassured employees that there would be no witch hunts, there was place for everybody, and that quote unquote hard work will go rewarded. He also said more significantly that employees had no reason to be worried because the economic climate was happy, the management was happy, and that they had in fact every reason to be happy. More importantly, N. Srinivasan, in a personal touch, also gave employees a few tips, saying that, there was so much untapped potential for the cement market, saying that there were limestone reserves in the north and northeast, and several places that India Cements had not quite touched yet. He even said that he expects multiple cement plants to flourish along the length and breadth of the country in the near future. In conclusion, he bade them farewell and also said that he would miss them all very dearly. So N. Srinivasan himself, in a very emotional affair, although he was quite stoic, while he spoke through that address, bids farewell on his own tenure as managing director and vice chairman at India Cements.
All right, Jude, many thanks for joining us. On to a CNBC-TV18 exclusive. The RP Sanjiv Goenka Group is planning a capital expenditure of 35,000 crore rupees over the next 12 to 18 months and over 50,000 crore rupees in 3 years. Speaking to me earlier, Chairman Sanjiv Goenka outlined the group's growth plans. He said that all their businesses will expand significantly, with the biggest expansion being planned in the chemicals and the carbon black sector. Goenka added that the group was eyeing a market cap of 2 lakh crore rupees over the next 30 months. Take a look.
All our businesses will be expanding significantly, but the biggest expansion will be in the chemicals and the carbon black sector. But of course, every business is growing exponentially.
Before I get specifically to PCBL, because you said that that is going to be the growth engine in terms of expansion plans, but what would the group level capex be, for instance, over the next 12 to 18 months?
Over the next 12 to 18 months, we will be spending about 35,000 crores, and over the next 3 years, about 50,000 crores.
And what's the growth aspiration? You've now got a market cap of almost, $7 billion. What's the growth aspiration?
We touched 70,000 crores this morning, I'm told. And this is without taking our unlisted ventures. But over the next 30 months, 2 lakh crores. We are investing not only in distribution, but we are investing in generation as well. So right now, over the next 2 years, we are going to set up 3 gigawatts of renewables, which is hybrid between solar and wind. The projects are under execution right now. And this will go into our distribution networks in Calcutta, in Noida, in Rajasthan, in Maharashtra. We are looking actively at hydrogen electrolyzers.
Well, that's Sanjiv Goenka. Now, India is all set to get its first IPO from an electric vehicle manufacturer. Ola Electric's much-awaited IPO will open on Friday and will be priced between 72 and 76 rupees a share. The company hopes to raise 5,500 crore rupees from a fresh issue of shares. The IPO will also include an offer for sale from promoter Bhavish Aggarwal and investors like Temasek and SoftBank. However, the pricing pegs the company's valuation at $4 billion, and that's a 20% lower than the $5.4 billion valuation assigned to it by a fund raising exercise that took place in September of last year. Speaking to CNBC-TV18, founder Bhavish Aggarwal said he has cut back on the stake that he's selling because he believes that the value of his holding will rise going forward, adding that he hopes Ola Electric will turn profitable in the near future. Take a look.
From the beginning, our issue is largely a primary issue. Even now, if you think almost 90% of more than 90% of the capital raised is going to be primary. Because we are investing for growth and we are investing for making this company and the Indian EV ecosystem much larger. So the secondary was always a small portion of it, and my share was a small part of that. And you're right, I have cut back a little bit because I do feel there's a lot of growth ahead. There's a lot of opportunity for investors to make money ahead, and I also see my own share value rise in the future.
Well, that's Bhavish Agarwal there on the Ola IPO. Now, digital transactions have grown 52% in volumes in the last 10 years. In its report on currency and finance, with the theme India's digital revolution, the Reserve Bank has said that UPI was the preferred method of retail payment, having a lion's share of nearly 80% of the total retail payments in FY24. Now, the report points out that India's digital economy, currently estimated at a tenth of the country's GDP, is poised to constitute a fifth of the GDP by 2026. Ritu standing by with more interesting data from the report. Ritu, take us through what the RBI is highlighting.
Well, the phenomena that is digital payments is all too well captured in this latest RBI report, which points to a 52% growth in the volume of digital transactions and 12% growth in the value in just the last decade. Now, take a look at the numbers. The total number of transactions per capita of the population has increased from 0.2 in FY6 to 114 as of FY24, and the average value of these transactions per capita from 40,000 rupees to 16.8 lakh rupees now. And at the same time, the share of volume of paper clearing has plummeted to 0.4% in FY24 from 81.9% in FY 2006. But not surprisingly, like you said, UPI has dominated retail payments with 80% share in the total digital volumes. That is helped by 424 million unique users. And to put that in perspective, that is roughly a third of India's population today. In volume, in value terms, of course, other modes like NEFT, RTGS, they still dominate. But what is perhaps the most heartening takeaway from this is that digital adoption is not just concentrated in the big cities and the metros, because today over half of the fintech consumers are from semi-urban and rural areas, and more than a third of digital payment users are from rural areas alone. A quick word on RBI's survey to assess the adoption of digital across merchants and consumers as well, where the report finds that awareness about digital payments is higher when it comes to merchants compared to consumers. The adoption levels among consumers is also lower, with only 41.9% consumers having used any digital payment modes at least once in their lifetime. Similarly, about 36% consumers are current users of digital payment modes, which is lower than merchants, and there's higher users among males compared to females. And no doubt, of course, that COVID has been a catalyst in this. 60% merchants, in fact, observed an uptick in digital payments following COVID, and 4 in every 10 consumers reported that they only started using digital payments after the pandemic.
All right, Ritu, many thanks for joining us. The RBI report also points out that the emerging challenges from digitization are plenty. Lata standing by with those details. Lata, the RBI report flags the potential threats from digitalization as well. Take us through the key causes of concern or the key risks that the RBI is warning us about.
Well, absolutely. The digitalization spread is very rapid, and a large part of the document is singing its praise. It says that the amount of loans disbursed through digital channels by banks and NBFCs has risen from 6% in FY17 to 32% FY22. That's quoting an EY study as well. But the dangers, yes, cybersecurity, biggest danger. Data security is another danger. But more important are also risks to financial stability. And one is, of course, because of digitalization, BNPL, buy now, pay later, herd mentality, that leads to financial instability. Likelihood of more loans going bad. But the bigger problem is actually a concentration of power, because, without naming names, Reserve Bank does point out that big tech has a big advantage, and therefore there can be concentration of economic power in e-commerce areas. And that can in turn lead to sometimes lesser, lesser impact of RBI's, say, interest rate hikes if it wants to tone down the amount of lending. But on balance, Reserve Bank says that actually, because of digitalization, the impact of its inflation control measures have actually improved. That's what their model suggests. But they are definitely worried about digitalization increasing financial instability risks. Because of the leak of data, and because of the widespread use of digital instruments by people who are not yet trained in financial literacy and in data security issues. one of the ways in which Reserve Bank has controlled it, or actually several ways, they have increased the amount of controls on fintech-led lending. But the bigger thing that the Reserve Bank has embarked on is its own cloud. The Reserve Bank is establishing its own cloud infrastructure, and thereby it hopes to improve financial security.
All right, Lata, many thanks for joining us. Up next, we bring you the latest on the Delhi coaching centre tragedy, where the death of 3 civil service exam aspirants in a waterlogged basement has snowballed into a political fight. That and more when we return. The death of 3 civil service exam aspirants in a waterlogged basement of a coaching centre in Delhi has snowballed into a political fight between the Aam Aadmi Party and the BJP. The tragic incident took place on Saturday when the gate to Rao's IAS study circle in Old Rajendranagar broke and water gushed in after heavy rains led to waterlogging in Delhi's Old Rajendranagar. The water got accumulated in the basement of the building, which was housing 20 to 25 students at the moment. The issue rocked the MCD house as opposition councillors trooped into the well of the MCD house protesting against the deaths and demanding the resignation of the mayor and Delhi chief minister over the incident. Meanwhile, the Delhi police has issued a notice to the Delhi Municipal Corporation seeking information in the investigation of a case registered in connection with the death of the 3 students.
वहाँ पे जो रोड के किनारे स्टॉर्म वाटर ड्रेन लोगों ने इंक्रोचमेंट करके उसको कवर कर दिया था, जिसके कारण उसमें पानी जाना भी दूभर था और उसका क्लीनिंग भी दूभर था जी। तो उसको हमने लगा दिया है कि वो सभी इंक्रोचमेंट को डिमोलिश कर दिया जाए और उस ड्रेन को रिकवर किया जाए। ये एक सिस्टमेटिक चीज़ है जिस पे हमने कार्रवाई की है। दूसरी कार्रवाई ये की है कि जो बेसमेंट्स इलीगल हैं जी और जो सिक्योरिटी एंड सेफ्टी के लिए थ्रेट हैं जी, उन पे भी कार्रवाई स्टेप अप कर दी है।
Over the last 48 hours, civil servant aspirants has been sitting on the roads demanding action against the people responsible for the civil laxity that has been shown from the side of the administration, due to which 3 students had to lose their lives. The protests are continuing. Just a few moments ago, the Lieutenant Governor of the National Capital came and met with the students. The students have put forward their demand, where they are demanding that the manner in which the facilities are being provided to them from the side of civil agencies, this is something that should be looked into by the administration. One after the other, the students has constantly been complaining about the various civic issues that they face in this entire area, and no action has been taken. And hence the students have decided to go ahead and sit on this dharna, making sure that the manner in which the administration has been working and the manner in which the administration has not been listening or has been turning a deaf ear to the demands that have been made from the students is something that is on the cards. It remains to be seen if at all after this protest some action will be taken by the MCD or by the authorities to make sure that the conditions in which the students are forced to live over here, that is bettered in some way or the other.
Terrible tragedy then. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. We're back in a moment with more. Stay tuned.